Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of ChargePoint, ticker symbol CHPT. And here we are looking at the daily chart during market hours on Tuesday, March 12th, and current price is right around $1.88, being down about 1.5% right now on the day, but that is changing as you can see. And so I just wanted to go over some of the levels I had previously gone over and just kind of clean them up, refine them so we can, get some ideas of where price might be going, whether that's to the downside, finding a bottom, having potential dip buying opportunities, or potentially reclaiming support and moving higher. So, I'm just going to throw up all of those levels, starting with the big picture here, and then I will zoom in to current price action. And so basically what I wanted to start with is this uptrending dashed white line based on these two pivot lows going back to the end of November, beginning of December of 2023. And we can see that, from those two pivot points, we did get some consolidation around there, but it didn't really act as much support. So, I did just want to point that out, that we are trading below that, and we might be, needing to find or reclaim support above a different trend line. But yeah, just wanted to have that up there. And then, zooming in on the chart here, I do have these three Fibonacci retracements all going to the upside, because I do think that we are struggling to find support, and we might be finding that to the downside. And so one of those retracements is this orange one, going from the low hit on January 19th up to the high hit on the 24th. The other one being this yellow retracement going from the low hit on February 6th up to the high on February 12th, which also was a double top, being the same high was hit on the 15th. We did pull back, and now I do have this white retracement from the low of February 26th up to the high of February 29th. So hopefully, with these retracements, we can find some levels that might be acting as support, and then we can start to move higher. And so from them, with current price right around 187, we are trading below this orange line that I have drawn up here based on the closing price hit on February 5th. That is $1.88, trading below there. Hopefully we can close today, Tuesday, March 12th, above 188. But if we do close below it, what are some levels to the downside that we might be finding support at? So one would be a price of $1.85. We did wick below that today, hitting a low so far of $1.83. But that does, represent this previous low. So we very well might be finding support there. However, as I mentioned, that was a previous low. We have gone lower than that today. We were also lower than that on March 6th, hitting a low of $1.80, being just after earnings. And actually during the after hours trading around earnings, we actually did hit a low of, I believe, $1.72, which is below this gap here at $1.76. So, it is quite possible that because we've been putting in lower lows as well as lower highs, we might be heading lower during market hours. We might be heading to 176. We might be heading to 172. So I think that is something to consider. And then so related to these levels to the downside, I do have the 618 highlighted from this orange retracement. That is at a price of $1.83.5. We've already tested that today. And so these are levels 183 to 185 that we need to be closing above. If we do see a close below them, I do think we will be heading down to 176. But that could be a good dip buying opportunity. And then, as I had mentioned, 172, we do have a confluence of these two Fibonacci levels, really this extension from this retracement up here. So that 1618 extension is at a price of $1.71.3, coinciding almost perfectly with the 786 from this orange retracement at a price of $1.71.4. Really, just being right around the range of $1.71 to $1.72. So, that might be a level where we do find support. But, we also could be breaking lower. And so the previous low, the 52-week low, is at a price of $1.56. That was hit on January 19th. And, so if we do continue to make lower lows, we might very well be retesting $1.56. And, kind of in support of that, from this yellow retracement here, we do have the 1618 extension at a price of $1.52.9, or right around $1.53. So it is quite possible we could be revisiting those lows. And if I do switch over to the hourly time frame, we can see that right around earnings, we did hit a low of $1.72, I believe. Let's see. Yeah, a low of exactly $1.72, which does coincide with these levels that I had mentioned, does coincide with filling that gap. However, that was during after hours trading, not during market hours. So, I do think this could be kind of like a foreshadowing of where price might be going. So I do think it's good to exercise patience and also to be observing, where we do close today on Tuesday as well as Wednesday. If we're closing below 188, I definitely think that means price is going lower. But this also could be a fake out. Switching back over to the daily time frame, this purple uptrend, I had mentioned, another uptrend that we need to be respecting. That, as I had mentioned in the previous video, could be, the neckline for this head and shoulders pattern that could suggest prices going much lower. But, it also could be a fake out sign. If we are getting price action below that level, but we're not getting two closes below it, that could just be a fake out. And so right here on March 6th, we did get some price action well below it, but we closed above. That at that time was a fake out. And then on yesterday, Monday, March 11th, we did get price action below it, but we closed above. And so now we are currently trading below. We're going to have to see what our close is. Ideally, it will be above 190, 191, or 192. That would suggest this could be a fake out to the downside and that we might be finding a bottom and might be moving higher. And so if we are to move higher, levels that stand out to me as having acted as previous resistance that might be acting as resistance again, one of those levels is the 786 from this yellow retracement. That is at a price of $1.96.1, or right around $1.96. And we did get a number of wicks that could not break above that level. And so that does seem like it is notable resistance. And then just above that, we do have the 618 from this white retracement. That is at a price of $1.98.3. Again, wicks, 3 wicks up to that level, but we could not get any closes above. And then the 50% retracement from that Fibonacci is at $2.01.5, right around that psychological level of $2 a share. We got a couple wicks up to there, but we could not get any closes above it. And then also I do have this red line drawn at $2.03 with previous lows. And so really just right around $2 a share, we need to be reclaiming that. And if we can't, I do think price will be going lower. And so on the note of reclaiming levels, this wick high that was hit on March 8th was at a price of $2.04, so just above $2.03. And so we need to reclaim that level, get a close above it. Actually, 2 closes above it, getting first 1 close above it and then a second close above that high that would be hit, following the first close above 204. And so we need to be seeing that to be moving higher. Right now, with these big wicks to the upside, we're showing weakness. And so I do think that 176 is on the table, potentially 172 actually seems pretty likely. So for me, I am trying to exercise patience. I do have a position in ChargePoint and I am down in it. So this current price is a discount for me, but I do think that there will be bigger discounts. So I'm trying to be patient and I am trying to wait to buy that dip and to wait and see, are we respecting support? Right now, it's unconfirmed if we have broken below this purple uptrend. If we do close below it, if we do close below 190, if we close below 188, that suggests to me that further downside is likely. But if on Wednesday we get a close above 188 or a close above 190, 192, that would suggest to me that today's price action is a fake out breakdown and that we could be reclaiming these levels moving higher. And so, I want to be evaluating that, but I also want to be prepared to buy the dip. If it does present itself, I want to be able to buy that, but I also want to be able to, not overextend myself too much at current price in case it does go lower. I am just holding, waiting for higher prices, and I do think they will come, but with this potential head and shoulders pattern, which would suggest price action coming down to, let's see, from the current break from that neckline, that would suggest price going down to $1.40. And so I also want to be prepared for that. If we do break below all of these levels, I want to be able to be in a position where I can take advantage of that. So I don't want to overextend myself too much right now. Even though I am negative, I could be even more negative, and I want to be getting my average down aggressively if we do cross below 176, 172, or get into the 150s. If we get to 140, I want to be buying that dip. And so, I'm trying to be patient, and I hope you are too. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.